The Nigerian Council of Registered Insurance Brokers is urging President Bola Tinubu to prioritize insurance as a key driver in achieving a $1 trillion economy. Executive Secretary of the Insurance Brokers, Mr. Tokwe Daramola, made this call in Lagos, disclosing that the insurance sector has a vast potential to support economic growth, but deeper reforms and stronger government backings are essential to realize its full value. He said for the $1 trillion economy's vision to materialize, insurance must be strategically positioned and meaningfully supported. The Executive Secretary described the passage of the Insurance Reform Bill by the House of Representatives as a significant milestone, noting that it now awaits presidential assent. He commended President Tinubu's administration for implementing the group life insurance scheme for workers and investing in key infrastructure and high projects such as the Lagos-Calabar Coastal Road and Sokoto-Badagry corridor as growth enablers for the insurance industry. Meanwhile, Nigeria's headline inflation rate dropped to 23.71% in April 2025, down from 24.23% in March. According to the National Bureau of Statistics, food inflation rate in April 2025 also declined from 40.5%, dropped lower, but percentage, that's on a year-on-year basis. Financial expert, Chief Executive Officer of RTC Advisory Services Limited, Mr. Okpeyemi Agbaje, on our Business Nigeria program earlier today, outlined practical strategies to tackle Nigeria's persistent inflation issues and projected a further decline moving on in the year.
I believe it will continue to decline. I believe that it has been more, the decline in inflation has not been as sharp as we expected post the rebasing. And that may call to question the fact that there are additional issues from the government spending side that is also driving inflation. So you might find that there is also a need for the central bank to examine the impact of spending on inflation beyond just focusing on monetary supply. Yeah, the impact of spending on monetary supply itself. And therefore, they might find that there's work to coordinate on the fiscal side with the Ministry of Finance and the fiscal authorities. So I think that the indirect answer to your question, yes, by December, inflation should have declined, and we would expect that the interest rates should have declined, anchored around a declining monetary policy rate.
The future of African real estate was in focus at the 2025 Africa Bilateral Partners Regional Leadership Summit, which held in Lagos, convened by the National Association of Realtors. The summit brought together key local and international partners to explore how innovation and collaboration can drive sustainable development across the continent. TVC News senior business correspondent Ifunanya Eze reports.
As Africa faces rapid urbanization and increasing housing demand, stakeholders gathered in Lagos to chart a new course for real estate growth across the continent.
Whether in the United States or here in Africa, the challenges of making housing more available, affordable, and accessible is very real. To capitalize on our shared strengths, overcome our shared challenges, and build a better, more sustainable future, we must work together.
What we discuss here for Africa as a region, they cut across the rest of the African countries. And what I have learned, having better settlement, organized housing for our people requires a concerted effort.
It's a booming economy, not just Nigeria, South Africa, Ghana, Kenya. We're finding all over Africa, the real estate industry is very buoyant, very bullish, and yes, very, very lucrative opportunities. And I think we need to showcase ourselves out to the world as well.
Panel discussions highlighted the need for deeper collaboration, investment readiness, and regulatory reforms to strengthen real estate markets and improve resilience.
We will have to continue to advocate to government what the right policy should be that brings out the right results. We can't stop doing that because we have to have policy is what drives everything. Without the right policy, you won't have a market. And then the enforcement of that policy. So if the policy is wrong, you can't get the right result. And the policies does not remain stagnant because it will keep changing as times continue to change.
There's no accessible mortgage in Nigeria, for instance. I mean, there's no way anybody can afford to buy a home with 27 to 30% interest rate. How are they going to do that? So government needs to step in and encourage foreign direct investments and people to put their money in creating mortgages for homeowners, for people to get mortgages to own real estate. Otherwise, it's impossible.
If government can put the policies in places and curb out the financial instrument and the security for an investor, that if you invest any funds in real estate in Nigeria, you're going to make a return. The tax will not be kind of damaging to your investment.
Participants expressed confidence that the summit's outcomes will help stimulate broader economic growth across Africa. Ifunanya Eze, TVC News, Lagos.
We're no trading in the Nigerian market today due to the public holidays, but outside our shores, shares jumped and the dollar paired recent gains as Asian markets reacted to better than expected United States job data ahead of talks in London aimed at mending the trade rift between the United States and China. But Wall Street stocks had closed sharply higher on Friday after the jobs data eased concerns about damage to the world's biggest economy from Donald Trump's unpredictable tariff regime. MSCI's broadest index of Asian Pacific shares outside Japan climbed 0.7%. Australian market shut for a holiday. Japan's Nikkei stock rose 0.9%. Pan-region Euro stock 50 features pointed to a decline. U.S. stock features, the S&P 500 E- slid 0.2%. Trade optimism lifted China's shares. Hong Kong and Seng rose 0.8%, touching the 24,000 points level for the first time since March 21st. China's blue chip CSI 300 index added 0.2%. Japan's gross domestic product contrasted less than forecast in January to March quarter amidst upward revised consumption figure at a time when uncertainty surrounding U.S. tariffs is clouding the outlook. Economist median forecast shows that Japan's GDP shrank 0.2% in 3 months through March 31st rather than 0.7% announced in May. Now, according to the report, capital expenditure expanded 1.1% the first quarter, revised from 1.4% against 1.3% economists estimate. Japan faces a 24% U.S. tariffs from July unless it negotiates a lower rate. Private consumption, which accounts for more than half of Japan's economy, grew 0.1%. Where crude oil prices held on to most of last week's gains as investors awaited U.S.-China trade talks in London, hoping a deal could boost the global economic outlook and fuel demand. U.S. West Texas Intermediate crude rose to $64.69. Upward review of 0.17%. Brent sells for $66.58 with an upsurge of 0.17%. Bonnie Light sells for $78.62 with a downward review of 2.84%. And for the OPEC basket, dealers offer $65.10 with an uptick of 0.05%.